It's Sunday the 14th of November 2021. It was an important week for the gold price this week, breaking through the 1830, 1835 resistance level that had been sitting below for the last 4 or 5 months since June. This happened on a hotter than expected inflation number that came out on Wednesday, highest inflation reading in 30 years. Got the headline there, so 6.2% annualized rate, biggest inflation surge in more than 30 years. I think the interesting thing about this, and I've spoken about this a couple of times previously, is that typically in the last 6 months or 9 months even, when we've seen these hotter than expected inflation numbers, it's been negative for gold, because the perception is that this would increases the likelihood of rate rises or brings forward the timeline for when rate rises are going to happen, and this would be negative for gold because if real rates are rising, it's negative. And I think that's really shifted in the last couple of months. We've seen the same thing with the employment numbers a few weeks ago. There was a better than expected number, which is almost always bad for gold, but it was actually, the gold price actually went up there quite strongly as well. And that's really, there's something shifted in the last few weeks, and it's really about inflation now. And I think that employment number, when it's come with higher wage growth, it's sort of cementing that inflation narrative. And now it's become a political question. I was just I just typed in Biden inflation. I read a few headlines this week. Here's a few. These are not business news websites. These are political news websites. Biden not taking inflation seriously. Biden can't do much about inflation. Inflation is surging. People are hopping mad. I think this is quite important because now inflation has gone into the political sphere, and we're getting to that point now where it's sort of, what are you going to do about it? And I think deep down, a lot of market commentators know that they can't do much about it because they'll blow up the stock market. But they're going to have to be showing to try and do something about it. But at the moment, it's all talk. But if it becomes the hottest political issue going into next year when they've got midterm elections and all this, that changes the narrative. And I think it's really when that political pressure becomes so strong for the Federal Reserve to do something about it. Inflation is negative for, it's worst for the poorest people, for example. If they have to do something about it, that choice between inflation and hiking interest rates and hurting the stock market, that's when things get really interesting. And I think we're at that point now where the market's starting to catch on. So obviously gold broke through there. I've drawn that little sort of a double bottom, whatever you want to call this, a complex head and shoulders bottom over the last 5 or 6 months. I think that, around that 1720, I think is a fair point to call the bottom. Not going to count this long tail that occurred on a Sunday night in the US, Monday morning in Australia. But I think that around 1720 to 1830, a breakout of that range just gets back into this previous zones around the I've got the 1920 level in here, which was the all-time high from 2011, and 1950. I think that's been a key point a couple of times last year where I got absolutely hammered from the 1950 level and fell about $80 in short time. So I think that's the next key level. And I've said previously, I think 1950 is the level it needs to get above to get into a full-blown bull market again, and for sentiment to really come back to the sector. I think what we're having at the moment is really just sort of recovery of such a down period for the last 6 to 9 months or 12 months even. So it's not a full-blown bull market again, but it's looking pretty positive. I think one of the other things, probably the Australian dollar gold price, that's just taken off in the last few weeks. Just gone vertical from basically moved $150 in the space of about less than 2 weeks. And that's, it's interesting that that's happening. We're seeing the gold price in US dollar terms move along with the dollar index. So, the dollar index is breaking out, but gold is also going higher in US dollar terms. Partly there's again a kind of a counterintuitive point here that if inflation is high, why is the dollar going up? That should be negative for the US dollar, but again, I guess it's perception of rates rising. They're going to have to raise rates more quickly. We'll see about that. But still, this is part of the reason I don't focus on the dollar index too much, because I learned a long time ago that gold can still move up in a rising US dollar environment, which is counterintuitive. But dollar index is measured against a basket of other currencies which are all doing similar things. So That's one that I don't pay too much attention to, but it's we've seen, if we look at the Australian dollar, as you'd expect from that Australian dollar gold price, Australian dollar gold is falling against the US dollar. Iron ore is getting absolutely smoked in the last couple of months. That's weighing on it. The employment figures are a bit negative. So just a few sort of bearish trends for the Australian dollar at the moment, and that's supporting that Australian dollar gold price, that breakout move. S&P 500, reached another all-time high this week, back up against this rising trend line for the last 12 months. Didn't break down in that period in early October, but the level of speculation is getting pretty insane at the moment. When we see companies that have no revenue, never sold a car, doing IPOs and having $120 billion valuations. This is end of cycle stuff. It's just a matter of when, not if. So that's the sort of a bit of a wild card when that finally breaks, and what that does to the wealth effect in the US economy. Because I think that's the other thing about inflation. That the companies at the moment are kind of the expectation is that they're going to be able to pass on these costs, and the economy is just going to keep ticking along. But what happens if these companies can't pay these costs, or people start to rein in the purse strings a little bit? It starts to weaken the economy, and then you get that sort of a real negative feedback there, where margins are falling. Not that this rise in the stock market is nothing to do with actual fundamentals of higher margins or anything. It's a purely speculative bubble at this point, and it's just a matter of where it falls over. But that's, I think, the market's kind of completely disregarding that at this point. But I still think it's at some point it's going to break, and probably break pretty quickly. The gold miners, GDX, I've talked about this head and shoulders bottom. Just worked out how to use the little pencil tool here, so you might see a bit more of that. But perfect head and shoulders bottom around that 33 breakout level on the GDX, and it's gone above that on the gapped up above it on the Wednesday with the higher gold price. And now, looks like there's potential to get us back into that sort of around that 38 zone would be the target from that head and shoulders bottom that's formed over the last couple of months. But still, a 38 level in the GDX is still, 15% below where we were mid last year. So it's, still very undervalued, I think, compared to where we potentially could go if this inflation narrative really takes off in the next few months. GDXJ, pretty similar. In fact, I'd say probably an even more bullish chart here. That right shoulder never really came down to the level of the left, and that's just hasn't looked back. The GDXJ was more beaten down. It had fallen, I think, almost a perfect sort of 61% retracement from the high, which I talked about a few times back in sort of September, October. That level, which happened to coincide with sort of one of these gaps. It's still below its 2016 high, whereas the GDX has sort of held its level around that 30, which was the 31, which was the 2016 level. So GDXJ conceivably can move, 10 or 15%, and still it's back up, but only at that 2016 level. So that's looking really good. And I think, as I said last week, I think that the movement into that sort of next tier down, there's good opportunities still in a lot of those stocks. But you do need to be careful, as we've seen in a few cases this week, both on the ASX and the TSX. A few individual companies, SSR Mining, I've been banging the table on this stock for the last 9 months. Again, nice sort of double bottom formation. I talked about it in the video last week that it had failed at the last couple of quarterlies had come out in May and August, and it had failed at that 1760 sort of level. Broke out above that again on the inflation data, hasn't looked back, and then the next confirmation levels, this $18.90, $19. This is a US dollar listing, and then it's gone straight through there on Thursday, and almost closed at 1970 there. So almost at 12-month highs for SSR. I think that's a very good chart formation over formed over 9 months. Fundamentals very strong. Cash generation, good balance sheet. It's been a no-brainer, and that's why I've been sort of moving into it and made it one of my largest holdings in the last 9 months. Perseus, that's fallen off my list there. I had that. Just hang on a sec. That chart looks really good as well. Bit of a cup and handle pattern. I know a few people have seen this one. Broken out above this sort of $1.70, $1.67 level, making 7 or 8 year highs. If you want to zoom out to the real long term, you can see there. I feel like this 220 level has sort of been a natural level that I thought might be achievable maybe next year. That was where a real bouncing zone from 2012, 2013, or 2012 actually. So that's one that I think that level is achievable if we get back up to that sort of 1950 level in gold. So that's what I'm watching. The quarterly wasn't that positive, which sort of led me to lose a bit of confidence with the Edikan problems. But hopefully that gets resolved and Yaouré can really pump out some good ounces in the December quarter. So that's still a core holding of mine. I haven't been selling any recently. Northern Star, that Australian dollar gold price, some of these stocks probably haven't moved as much as they really should have in a Australian dollar terms with that move, that $150 move. But we've seen a nice move from the $9 level. This chart's still a bit messy, but I think below $12, $11.70 there's probably if you want to call this a double bottom around that $9. Disregard this sort of false breakdown. 11.70, 11.80 there is the kind of double bottom confirmation where we could go higher, but it's still a messy looking chart. But that they are a relatively high cost producer now, so there is a lot of leverage in this business to a rising Australian dollar gold price. I think the all-in cost, because they've got a lot of capex, the all-in cost is high 1900s, I think, last quarter. So a $150 move in the gold price on a 400,000 ounces a quarter has a huge effect on cash flow. So I think the market will work that one out, but I think it's still very undervalued and there's still plenty of upside there. So another one that I've been buying in the last 6 months. Silver Lake, hasn't really looked back in the last 2 months. It's just gone up in a straight line. If it wants to load there, computer's just being a bit slow. So here's the Silver Lake chart. It bottomed around that $1.30 level and hasn't really looked back since then. Incredibly good turnaround. My average there was about $1.32. I'm surprised by how quickly it's moved, really, but it makes more sense. This is again a fairly high cost producer this year. I think the all-in sustaining cost guidance is north of 1,600 Australian. So this goes straight to the bottom line. This gold price increase, and a lot of these Australian companies have reduced their hedging as well, so they've got more exposure to the gold price. So a really good turnaround for Silver Lake. Looking a little bit toppy at the moment, sort of a few gaps there, and being sold into a little bit. But I think with the strength of the gold price, I've got that kind of $2 level as sort of the previous kind of support resistance level. That looks achievable with the strength of this move. So I am not planning on selling any of those that I got at $1.30, $1.32 average anytime soon until we start to reach up there maybe. But this was more of a trading stock to me. I don't have complete confidence in the company as I do in some others, and that it's not as cheap as some, but it was at $1.30. But continue to hold that one. A couple of others. AMI, Aurelion Metals, is interesting. That's a stock that I've gone into quite a bit in the last couple of weeks. I mentioned it last week. Reading some of the stuff about Federation, that Federation deposit, their new discovery, and potentially what the economics might be there. I start to get a bit more bullish on the stock, and I do think that their production woes might maybe kind of wash through the market now, and there's a little bit more upside there as well, or at least it doesn't distract from the exploration potential. But I think they've got the Great Cobar PFS coming as well, but that Federation feasibility study and resource upgrades and exploration, that's a game-changing deposit, and I want to be exposed to game-changing assets. So I bought into this stock more on just on Thursday when the market opened. I bought some at the open, added to my position there. So I've got a decent holding. Had been almost out of the stock except in my super fund, which I got sort of in the relatively low levels in the sort of low 30s last year. but I've added it in my normal account as well because I think there is upside here. It did get sold down very heavily in that July period, so maybe that still acts as a bit of a resistance level in the short term. But I think, as I said, exploration. I think there'll be more of a focus on good quality exploration results, particularly if you're a producer already. If you've got that protection of existing assets, if you can find near mine life extensions or new deposits that can use existing infrastructure, that's extremely positive and will have extremely good economics, which I think this will, some of the best base metal intercepts drilling wise that have been recorded on the ASX in recent memory. So that's another one that I've added to the portfolio just recently. I've been following this stock for a few years, but I think now is a good entry point, and the chart looks a little bit more positive. And I think, if it can break above this sort of the 40s, I think there's upside from the exploration potential there. So that's a few stocks that I'm watching. I'm pretty bullish at the moment. I've been saying for the last 4 or 5 weeks that the sentiment looked to have turned. The sector was completely washed out. There was no interest whatsoever. And since then, we've really just quickly moved. I said even in that period in August and September when the mining stocks were getting smoked, these things can turn around very quickly. So you don't want to be too bearish and just completely miss it. So I've sort of taken the approach of kind of an averaging in approach, and not, when I think we're starting to get near a bottom, I'm happy to start buying. I don't need to pick the exact bottom because these markets can turn around very quickly and leave you behind. And we've seen that with SSR, for example, in the last couple of weeks, just turned and hasn't looked back, and up 15% this week, up 10% last week, I think, as well. So, that's how quickly it can turn around with these stocks when they have good operation results backed by a rising gold price environment. So that's a few things I'm watching this week. A very, very good performance, and the tailwinds look very strong for gold at the moment. And I still think not many people are interested in this sector. It's still very niche. That there's no euphoria or anything. We're not even at kind of a mid-level sentiment. We're still below sort of a median sentiment, I think, for the gold sector. So, I think there's still we're not anywhere near a level where generalist investors are starting to get interested here. And I saw some stuff showing that ETF outflows from some of the sort of the main ETFs that that track gold, the gold price, that there's still outflows coming out of those ounces coming out. So there's still plenty of upside here, and hopefully that can the narrative now is shifted and we start to see movement into gold in the next 6 to 12 months. Thanks very much.